Super Thursday brings a trifecta of events. We have the UK election taking place, the ECB meeting, and here in the US we have Washington, D.C. in the spotlight. Of course, all eyes will be on James Comey's testimony, and that will be taking place at 10 a.m. Eastern Time on Thursday. So joining me without further ado to discuss all these events is Stephen Guilfoyle of Sarge 986. Good afternoon, good evening. Thank you so much for joining me today.
Good afternoon, Remy. Good to see you.
Well, Super Thursday is right around the corner, so all eyes will be on those events that will be unfolding. When we take a look at the UK elections, we might not get the results until Friday morning across the Atlantic, but how do you see all of these events affecting the markets?
Well, yeah, I think you've seen, at least the equity markets have been very quiet. Trading around the last sale almost all week. Traders themselves are getting cautious. I myself, my own behavior, I have probably bought more downside protection today, this week rather, than anything else. So my activity is in a space I don't usually go to. Usually when I hedge a position or something, I'll sell options because I like to bring in the revenue.
Yeah.
I'm in the unusual position of actually spending money on options this week because, let's face it, I don't want the unwanted political risk, both in the UK and here, and the risk that maybe Mario Draghi might sound a little more hawkish than maybe the markets are ready for. So there's risk in the air.
And as we look at today's oil inventory numbers, we're looking at lower oil prices. Now WTI fell 4% today, and we saw Brent tumble 3.5%. Given all the geopolitical risk that's happening in the Middle East earlier this week, the states of Saudi Arabia, Egypt, Bahrain, United Arab Emirates, they cut ties with Qatar. And earlier today in Iran, there were terrorist attacks, twin attacks, and the guards in Iran blamed it on Saudi Arabia. So if that's not enough geopolitical tension, I don't know what is.
Well,
but technically, what do you expect to see in oil?
Obviously, it's not enough geopolitical tension because you would think those things would put upward pressure on WTI crude,
yes.
And they certainly have not. So what we have here, we have a doorway around 46 3/4, $47 on WTI, which has now swung open. All right, that was a spot where we had seen some support, where maybe you thought maybe you could start getting involved on the buy side in some of the oil names. Now the door is swinging open. All right, now we're probably looking at $43 to $44 a barrel. That's the next stop. I am interested in buying oil names. All right, I'm not giving up on the space. I'm not throwing my hands in the air. But now I'm going to wait because now I know I don't want to buy it here. Now I want to wait to see if oil reaches $43, $44 a barrel. Once we hit $44 a barrel or even get close, I probably will buy the names that I consider to be the highest quality names in the space, which happen to be Apache and Schlumberger. I'm already long both small, but I would like to have a larger position for the next move up. So there is probably a cap. There's probably a cap of $50 to $53 on the price of oil right now. So it becomes something, as long as we see the support where we think we'll see it, it becomes something that will be very tradable going forward.
Well, Sarge, you've given us your take on the energy sector, but what about the other sectors? Where do you stand right now? If we look at the tech sector, we did see a substantial movement in the FANG stocks as well as banking, but what do you expect to see going forward?
Okay, I think that going forward, you'll still, even though we've seen some negative movement recently, you'll probably be okay in defense names. I don't think that's something that's going away. We've seen defensive name sectors do very well alongside the tech names. So you do still want to be in tech, although I sold my Amazon. I'm flat there. Okay. I've stayed long my Apple though, because Apple had a bearish MACD crossover in early May. They haven't really recovered from it. The stock has gone sideways. It's not behaving like the other FANGs. The other three FANGs all went parabolic. Apple has not. It's gone sideways. They put on this dog and pony show the other day, which didn't impress anybody. We can buy these things from other people. They're ahead of you. Do something impressive. I don't think that was impressive. That said, I'm a shareholder and I'm hanging on because I do think that one thing Apple does is know their customers. So, and their customers are going to be loyal. So I think you get some nice movement there. As for the consumer names, I still like Coca-Cola. Coca-Cola is, I like their yield. I like the way the stock has moved. It's stable. It's something that doesn't really run too far in either direction, but the ball seems to be rolling in the right way. Quincy seems to seems to tell a compelling story. Disney's been dangerous lately. I'm also long Disney, and I'm hedged up. So what you can do here, if you're afraid to spend $106 on a share of stock because you're a retail investor, is you can buy 106 calls. All right, you can go out maybe 1, 2, 3 months on 106 calls. If you get the bounce, then you'll still reap the benefit. If you're long the equity, then you probably want to protect yourself there. That is one of the one of the names I went defensive on.
And Sarge, last but not least, before we wrap it up, you've given us your take on geopolitical, political risk, as well as the various sectors. But once we get through Super Thursday and make it to the end of the week, I'm sure we'll be focusing on the Fed meeting, which is taking place next week. Now, we all know the jobs data last week disappointed in terms of non-farm payrolls, as well as revision and participation rate. But what do you expect to see from the Fed for the rest of this year?
I think, like everyone else, I expect a hike next week, June 14th, which, by the way, we'll also see CPI that day and retail sales, and business inventory. So it's a big macro event the day. However, we'll get that rate hike that we're all looking forward to. I think the long end of the yield curve, though, is telling you that no one has faith in what the Fed's trying to do. I think June is the only thing you can count on. I think going forward, there's really a good chance that the Fed will not be able to tighten monetary policy.
Okay, Stephen. Well, thank you so much for your insight as always, and I guess we'll have to hold on to our hats until the Fed meeting. So thank you so much for joining me today.
You bet, Remy.
Thank you.